Well, pretty wild follow through today. A lot of bumps along the ways. We'll get to that. What happened with the econ for sure, and what we're seeing under the hood. I think there's a couple important things to talk about here. This undercut and then just the bump. When you have these undercuts and bumps, you always want to see where you are technically. I'm going to show you how to spot this, and then you can do it for yourself. But most importantly, do we have an H or do we have a failed H? A lot of people thought we had that bear pendant and then it just kind of stopped dead. You had it for a day. This is where it gets super interesting as a trader, because the majority of traders are going to look at this and just assume, oh no, this is the bear pendant, therefore we know what's going to happen. You can always clone these and that'll give you your trajectory. But once you have this down, it's pretty clear, like, oh yeah, there it is. Sure, so that's a bear pendant. I'm supposed to short the break. I shorted the break. And then it fails. So this kind of stuff, when you see it in theory, it works great. When you see it in practice, not so much. That's really why you want to develop these channels and watch where they start. And you're actually shorting up here on the first move and then kind of covering into this when everybody else is starting to put their shorts on. It just takes a while to get used to the practice of it versus theory. But if you take a look at this on a 4-hour, you can see it very clearly in here and how you're holding that level, that 5,500. Take this all off, drop in RSI. And one of the things that I like to point out a lot, we pointed out the short-term one here when we had that Michigan consumer sentiment data that happened right in here. And then from there, we had this little move, and then we had that little divergence. We talked about that 2 weeks ago. That's why I say always subscribe to this channel, click notifications. What we go over here is extremely timely and it is actionable. I try to make sure of that. So at least gives you an area to look at. What was really cool to me was this. We do the undercut, like we did it right here. Boom, everyone's in sheer panic mode. We have to cover, the Nikkei's falling, the sky is falling, the sky is falling, and then the market just absolutely rips. And then it forms this, which is just absolutely great. And it just forms this level right in here where you have this higher high, or lower high rather now, and then you start looking at this, and now you have a much bigger one. The bigger these are, the more solid the bottom is. And a lot of people don't look at this and they're like, well, they don't really work. They work. You just have to learn how to spot them, and you have to learn how to get good at them. I always revert back to this one because when I posted this one on Twitter a long time ago, back in 22, I never got so much like email and stuff telling me that it doesn't work, but yet here you are staring right at it, and it marked the bottom. So is this marking a short-term bottom? Are there things that I'm concerned about? There are, but I do use RSI a lot. What I want to do is I want to show you some of the things I'm concerned about, because I think you have to look at this as a multi-prong. And everybody that's been watching this channel knows this. I view it like this. You have your macro, you have your fundamental data, and then, of course, you have your technicals. And the way that that all works out is simple. It's the what, the who, the when. So what we're looking at here is what happens, meaning the macro, tariffs, not tariffs, wax on, every day it's different, or wax off. And then the fundamentals, who's affected by that. We don't know. Every day it changes to an extent. And then you have also like geopolitical events that could change things. They could change the fundamentals, but then you have the technicals as to when you're supposed to act. So you can have an oversold market and then have a bounce on there, and it means nothing more than you have a technical oversold bounce in a market that's pretty unpredictable. Let me show you some things, and then we're going to do the fundamentals, then we're going to roll right into the technicals. Now, there was some data today that wasn't just what I would refer to as the best, and there's definitely some issues out there, so we're just going to talk about it for a second. ISM manufacturing, when this came out today, came in a little bit lower than expected. I'll show you on a chart. And the jolts came in lower than expected as well. But I just want to show you that this is what we were looking for today. Let me show you on a chart. But the jolts came in a little bit lower, but the problem really was the ISM. So when we look at this chart of ISM manufacturing, we can see that we were over 50. Then we got right to that 50 level, started breaking down below it. And then obviously you're seeing the turn that's starting to happen here. And it's starting to get a little slower and slower. This is one of the reasons we sold off around 10 o'clock today. There was a couple other little reasons, and obviously we're getting a ton of tariff news, and we'll have our tariff peak tomorrow, and we'll go from there. But when you see this, there's some slides I want to show you that are going to just kind of outlay some of the concerns that I would have if you were trying to say, okay, where are the concerns with the economy, or what are you saying? This is one, but the big dogs are coming. So when we see non-farm payrolls coming out, 151 was the previous consensus, is 128. Unemployment rate, the consensus is 4.2 versus 4.1, hourly earnings, but they break down non-farm payrolls, government, manufacturing, and non-farm private. And you can see the consensus side here, and we're going to get that ADP data tomorrow to look at this. But you're seeing this 140, and now we're going to a 110 level. What gets me is they're saying 50 here on the forecast side. All right, so if we're going to miss 50 on the government payroll side, and the consensus is 128, and their forecast is 80, and this is just their site, but how off is the consensus, and where are these other jobs coming from? So in other words, if you're at 128 and they're at 110 on consensus, and the government forecast that they have is minus 50, where are these other jobs from the government that are going to get this consensus to where it needs to be? Or all of a sudden we're going to have this huge manufacturing group that's supposed to come in. This is going to be really interesting to see how this plays out on Friday, because someone's really off here, and we're going to see who it is. But somebody is seriously off with these numbers, and we're going to have to go from there and take a look at it. But if I had to tell you some of the things that concern me that I see, a lot of it really has to do with the bond market. Let's take a look. Now on the macro front, there's a couple things to point out that I think are really important. We have to look at some of these macro issues before Saturday so you can understand some of the issues, especially with all this econ data coming out. But BBB minus and on downgrade watch. So this is pretty much the last lever before you're really junk your investment grade. And this is going to come into play when we start looking at some graphs here. But I just want to show this because you can see right here how we spiked. And you were looking at roughly 70, 80 billion. We're on watch. It did drop a little bit, but this is definitely an issue that's looming, and you can see how it's not being taken seriously. Now, with all that dropping and the Atlanta Fed falling apart as it did, that line didn't really move. And obviously this moves a lot faster than that graph that I showed you, but it didn't move, and you can see it in this other graph. Everyone's seen this Atlanta Fed now, how we've gone from this 2.5% to 4%, they said, down to here. They move super fast. It's extremely erratic. But it does point out that even with this, we didn't see this movement. And when you overlay these two together, it's kind of interesting. But before we get to that, I think it's also important to just note we're up here with trade policy at all-time highs, meaning for when they've been monitoring the trade policy uncertainty index, this is where we're at. So that's going to cause more strain on the bond market, obviously, and it's going to make people rein in their spending even more, even on the corporate side, as we're starting to see. And this is what I mean when you overlay this. So could this be an issue? In some regards, yes, I think this is something that I'm a little surprised that it's not doing what we expect it to do. And they seem to be taking it in stride. So this is the corporate bond spread, and you can see it right down here. And what this is showing us is that compare this to economic policy uncertainty index, overlay the two. And you can obviously see where it happened during the pandemic, and you have this spike, and the spreads between corporate bonds and treasuries go up, and they go up in basis points. So if you were to look at something like that on the basis point spread over a treasury, in this case, it was over 400 basis points. In this case, we didn't see anything like that. Back here, we saw the corporate bond market just absolutely explode when you had the great financial crisis, up to 600 basis points, and you had tons of economic uncertainty, but nowhere near what you had here. And here we have the inverse. What's bothering me about this is it just seems that no one seems to be taking this seriously. In other words, we're seeing the spreads in the equity market, but you're not seeing it in the bond market. And that can really underpin the market. So if I had to tell you one area that I am a little concerned about, it's the lack of concern I'm seeing in the bond market on the corporate side. And some people might say that's a good thing. Maybe it is, but you would think that you would see some kind of uptick here, and we're just not really seeing that. Now, Apollo does a really good job of this, and that's whose slides I'm showing. But what they do is they took the Challenger grade Christmas data, and they just show you the job cuts on the government side and where we're at. These numbers have not come into non-farm payrolls yet. I'm showing this because if I was concerned about something, these were the things that would concern me. Seeing these kinds of spikes going into a non-farm payrolls number, this would be a concern of mine because it's not reflective when you see the consensus number in non-farm payrolls. So I'm kind of curious about how they're going to remedy these two on Friday. Now, when you take out the job cuts here and you take out the government, the other thing that I would just point out is from 23 over, you are seeing a little bit of a lift. And you can't really see that, but maybe you can see it a little bit. Let's clean all that off. And then let's just show you this from this standpoint. So if I took a straight line and I went across from here, you can see where you're at. Is it perfect? No, it's not a perfectly drawn line, but this gets you back to coming off the pandemic. It's way higher than 23 with what we're dealing with now. This going into non-farm payrolls after what we saw today with the JOLTS jobs being lower than expected and the ISM manufacturing data, if you want me to find an area of concern in the market from a macro standpoint, this is a concern. And I think we'll get a clearer picture of this on Friday. So you know what you're looking for, and you know there's issues out there. One of the things that I like to point out is I like to look at what's happened in the past because that's really all we have, and then extrapolate out what's going to happen in the future. So yesterday, one of the reasons why, even pre-market, if you watch the public pre-market, not even the private ones, we were all over this saying you don't really want to be shorting this because of where you were. And the point that I was making was that, hey, if you're going to start your day and you're going to come in down here, you probably just kind of want to hold off a little bit and watch how this plays out. But it became very clear in the first hour of when we were live trading. So what I tend to do is drop a line from those, and then I just mark off those areas and say, all right, when that's happened in the past on an hourly chart, what has taken place? So you can see here, for example, an hour or two later, we were up. Here we are, an hour or two later, we're up. And people are like, it's not that simple. Sometimes it is. Sometimes it's really that simple. And what you started really seeing, which I thought was fascinating, was all these bottoms from the April 18th to the August 5th, they all had the same pattern. And they all stopped right around here. And again, it doesn't mean anything more than short-term oversold and setting up to bounce. You extrapolate this out on the 4-hour, and then you can see the RSI turning, which could mean that you're putting in more of a formal bottom. But from our standpoint, from a day trading perspective, what we wanted to understand is we wanted to be net long, not short. Even if I was putting shorts on, I had to understand that I need to be super cognizant of this. And then when we come into today, we know to have a long bias, which obviously played out perfectly, and we'll get into some of these names in a moment. But take a look at this live. The Qs, you're at like a 13. You're really oversold here. There's bounces out there, and they're going to be vicious. Just understand that. It doesn't mean it can't get worse, but you're grossly oversold here. Even here, if you look at the 25th, the last time you were near anything like this, the next hour you just lifted all the way up. You had a huge move if you really want to get into it. The fact of a rally out here is definitely out there. Again, if you come to that like 13, 14 level, you look at that bar at 1030, and then you're sideways. And then from here, if you mark that off and say, well, where'd that take us? Well, you moved 2% off of that. So is there a 2% move out there to squeeze shorts? Yeah, there very well could be. You're grossly oversold here. So for us to bounce to something like 466 and get up there, that's nothing for that to happen. And everybody will get squeezed. And if you really listen to what I'm saying there from this level on, I'm saying I don't know that it's going to happen, but that it's a really simple way for us to bounce. So you have these macro issues that are outstanding. You have the fundamental problems that are outstanding. And then we bounce and everyone goes, oh, we're safe. You're not safe. It's no different than when you got over here on the overbought section of the market or here, and then you started to roll. It's no different than having a negative divergence as you have right in here. And then all of a sudden you start to roll and you know that the 4-hour was already pretty weak up there. You already know you had a divergence here. You can see it. Everybody can see it. So you already know you have problems. You just don't know when. So you're on your guard, and you never know it's going to be this. And I'm going to be really clear about this. This did not telegraph that we were going to have one of the 5 fastest drops ever on the market. That's not what I'm suggesting. I'm suggesting that this is telling you that this is a place of weakness. Now, what you are starting to see is you're starting to see an appetite for equities. And you're starting to see it even on the short side for a second, like the short squeezes. And it's pretty fascinating to see. But if I'm to look at this right now and just kind of extrapolate out what I'm seeing, this is how bottoms are formed. You might not want to hear that. You might not like it. And it does not mean that you're going straight up. And we have a lot of fundamental issues, in my opinion. One of the biggest issues for me, really, and I just can't get my noodle wrapped around it, is the bond market's acting like not a care in the world. That's why I spent time on that. And then I go and take a look at insurance, which is MOVE. Now, MOVE is bond market option volatility. Take a look at what's going on here in the past couple of days. They're buying volatility on bonds, which means you're buying put protection on your bond portfolio. That's what MOVE is. MOVE is like the VIX, right? So for those that don't know that. So then you go and look at like, well, what's high yield doing? Well, it stopped going down, but they're still buying protection. And then you start looking at the investment grade stuff and it's not going anywhere. So you have a lot of disconnects here, and you never know. You just don't know if there's a shoe out there or not. I'll leave it at that. But if I had to point that out the way I did earlier, that's the one thing I'm going to get into Saturday's video in great detail. And go through that. And if you are on the wait list to get in the community, make sure you look tonight and tomorrow for the invitation, because a few of them are going to go out. They take time to go out because I give everyone the opportunity to actually talk to me and do onboarding when they join the community. But if you take a look at how that's playing out there, it has my attention. Now, you have the SOX, and the SOX broke this, what I would refer to as a multi-year head and shoulders, and then just stopped dead. And you have some of these other names like the cap equipment manufacturers that are trying to hold on for dear life, but they're not really going anywhere yet. And so then you start looking at names like NVDA, and what is that really doing? It's rallying, but it's not really going anywhere, right? We're just off the bottom, and you kind of rallied, but you're not really seeing anything. Where we're starting to see it is the higher beta names that got shellacked. So what I'm focused on more than anything are names that did not take out previous lows, right? I'm looking for relative strength, and then you're finding it in these names that people are saying, oh, they're definitely going to go lower. What I also look for is when I have short positions or I want to short something and they don't work, which, shocker, I know someone does a trade that doesn't work. I know you don't see that on YouTube much, but like when you're shorting like the 55, for example, if you break a 55 shorting that day, it's like they work a lot. It works a lot. So when you start to see that, like, oh, breaks the 55 and then it gaps up, breaks the 55, gaps up. It's over and over again, right? Except the one time here where it actually followed through. When you see this, even here it worked through, here it failed. And it's starting to get tighter and tighter, and I want to show you this. See how the 55 is pointing up on MSTR? So that you can go and find these for yourself. That's why I spend time with this. And I'm going to start doing more educational videos and walking through trade by trade, step by step. I'm also going to do it in the free newsletter because I got a lot of comments saying, hey, start showing more trades again, especially swing trades. But I have tons of examples. But anyway, when you see this kind of stuff, you're like, okay, well, we broke and we came down. Well, how many times were you down here? 1, 2, 3, 4, 5, 6, 7. And do I do this? Yeah, I do. All right, I broke it. How long was I below it? 1, 2, 3. I broke it. How many times was I below it? 1, 2. Okay. This is telling you that this is getting tighter and tighter around an institutional level. Remember, 55 to me means do I have institutional support? When I see that, no matter what the name is, whether they ship bananas or pineapples or create AI, it doesn't matter to me. I always want to watch how you're acting at my institutional level. I use a 55. Some people use a 50. You should use what you're comfortable with. So I found this really fascinating that it's holding like that, because if you look at something like a coin, you're trying, but not really. Like you really can't get near it. But MSTR, now whether they're doing that because they're buying assets and the Bitcoin and they're hedging the Bitcoin against it, but we can also all see how Bitcoin didn't take out that new low. Bitcoin hit that low on March 11th, and then since then, it's done nothing. And everyone keeps talking about this silly little death cross, and I'm just going to just like burst everyone's bubble. But okay, so you have a death cross, all right? And then what? And then what happens? Because the last death cross that happened, the stock went up. So you keep hearing about this stuff, and I don't think people truly even understand what they're saying. So you see, like, here's the 55 breaking the 200. Oh no, we better get out. What happened? It exploded. So you got to be careful with this stuff just because people say things. They really don't even know what the heck they're talking about. So I always look at past performance and then go from there. I could actually make an argument, and I walked somebody through this the other day, that, oh, look, we have a death cross in the video. Ooh. And then at the same time, go tell me what happens when you have a death cross 12 months later. Where is it? Here's a death cross. Go tell me what happened 12 months later and if you should have been buying in there. So it depends on your time frame. Does this mean that I need to rush into it? No, but you have to look at the time frame. So today for me was fairly interesting. So I'm going to give you a couple examples of why and where I think this is going. So if IPOs keep doing like this, you're going to have a hot equity market, meaning companies are going to go to market. There's no doubt about it. So the easiest trade for me, which didn't work today, was that when I break VWAP on any IPO, it's just an outright short. Period. End of story. So when I'm shorting this today, they called me today because I couldn't find enough stock to short. So when they finally called me, I was like all excited because there was nothing out there to short. Now they had options. And I'm shorting this, waiting for it to break. And then all of a sudden, it just ripped and I got stopped out. I lost like $1 and I got out of the way. The guys in the room were trading it today. Now you have options out here that only go out to 50, which is why it's getting squeezed. You're probably going to want to watch this tomorrow. But what's fascinating to me is if you're going to start doing this coming in at 40, you have to pay attention to it. This Newsmax is obviously absolutely unequivocally insane. I personally think somebody got stuck in here. I think an institution got stuck in here, and I'm not going to walk through it. I'll walk through it on Saturday, but they get an allocation for themselves, and I think they mistook their allocation on this, is my sense of it, because it's 0 sense how fast it moved. See, when you move like this from like 1050 to here, you could have just had anybody, you could have issued more shares to Newsmax, and you didn't. So in other words, they wanted to buy this so fast, they could have just issued more shares. So this shows a mispricing of assets, unless somebody's somebody's wrong and they sold something that they shouldn't have sold, which is exactly what this is trading like. But when you have things that are moving like this, and this other one today was this WTF, which opens at 4 and goes to 21, you start seeing this stuff, you're going to start seeing more IPOs. It's just a fact, because everyone's going to look at this and go, oh, I need to get involved. And then what people are going to say is, oh, but there's a death cross. Well, should you have sold at the 55, or do you want to wait for your death cross to get out now? All right. I mean, this is exactly like, I say this so much because you can see it here and it worked perfectly. Why? Well, you had $1.7 trillion, right? J. Powell Itchy was actually selling to us there. So, duh, yeah, we're going to have a problem. Remember, this is when JPEGs were called NFTs. So very different scenario than you have right here. So you always want to do this research and you always want to look for yourself. I also thought it was interesting that we're not watching the financials break. They're not breaking down. And you can't really have the S&P continue to break down if that's not going to happen. Tomorrow we get some economic data and we'll go from there. That's it.